Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hope everybody had a very beautiful day of trading. And in today's markets, guys, well, the bulls just continue their domination and continue marching these indexes higher. However, today at least, it was a much more broad picture than at least we've had in the last week of trading. Now, in terms of news today, guys, we did have a speech by Jerome Powell as he was addressing the European Committee and talking about interest rates. So we're going to take a brief look into what exactly he said. And news article number 2, guys, undoubtedly has to be the Tesla deliveries numbers that came in last night, and they were much better than expected, which caused the stock to rally about 10% in today's trading. Now, for Tesla news, we are going to take a look at that when we cover Tesla's technical analysis in the later portion of the video, so definitely stay tuned for that one. So without further ado, guys, that's pretty much everything we're going to cover in terms of news today. Other than that, we're going to go through our major technical analysis rundown on our major indexes, see how the rotation is doing in the stock market, and then lastly, go through our big tech names and see, are there still any opportunities in big tech, or have they potentially ran a little bit too much to nibble? So without further ado, guys, let's get right into it. SPY up a nice 0.67% and QQQ very healthy 1.05%. The rally was very, very sustained pretty much all throughout the day, guys. No real hesitation there. In terms of the heat map, you can see the market is much better today. One of the nicest broad market events that we've had pretty much in the last week and a half of trading. We had been issuing concerns that the market was very, very top heavy. Most of your big tech names and semiconductors were doing a lot of the heavy lifting, guys, in the last 1 to 2 weeks of trading. So it's nice to see now that a few names that have been left behind in this rally are finally starting to play a little bit of catch up. You can see that even better when we take a look at the one-day relative. This is what I like to see, guys. A very, very healthy broad market to the upside. Really goes to show, guys, that the bulls do have it in them. Just need a little push in the behind, right? So everything pretty much in the green except for healthcare continuing to pull back, but that's okay, guys. Healthcare is holding up support levels very, very nicely, and I would not be surprised if they do join the party later on, potentially in the week or potentially next week as well. Looking very, very decent on the 1 week relative, guys. You can see the market is trying its best to broaden out. One day is not going to be enough to change all of your all of your industry sectors. However, they are starting to look very decent, led to the top, of course, by technology, consumer cyclicals, which is nice, and to the downside, unfortunately, healthcare, utilities, and defensives, industrials, and basic materials just lagging a little bit behind. On the 1 month, though, guys, we are still very, very mixed in terms of our market performance. We know that technology has been pretty much leading the charge so far. A number of sectors have been left behind, but they're trying their best to recover. So we will continue monitoring this rotation as it continues to manifest itself. So before getting into more technicals, guys, let's go over exactly what Jerome Powell had to say during his press conference this morning with members of the ECB, the European Committee. Pretty much the same thing as the Fed, but in Europe, right? So here we go. So Powell says Fed has made quite a big bit of progress on inflation, but needs more confidence before cutting. So coming into this meeting, guys, I was saying as of yesterday, there should not be any new things from Jerome Powell, and indeed there were not. So let's just get an updated view on exactly what he had to say in terms of the economy and inflation. So here's what Jerome Powell had to say this morning. We've made quite a bit of progress and in bringing inflation down back to our target. This is very true. Inflation has been downtrending now ever since we got that little uptick in inflation January, February, March, and the early parts of April. May and June have shown significant declines so far, so nice to see that in action. Now, the last inflation reading, talking about the one in May, and the one before it, to a lesser extent, suggests that we are getting back on the disinflationary path. This is very true for goods. As you may remember, every time we pull up the CPI report, I always go through goods and services, and for the most part, all of goods, guys, are now pretty much in a deflation or a disinflationary path. Services remain the sticky element. Now, we want to be more confident that inflation is moving sustainably down towards 2% before we start the process of reducing or loosening policy, which means pretty much interest rate cuts. So this is nothing new, guys. Jerome Powell just really holding true to his stance that he's been having over the last 8-9 months, just reiterating more of the same. Now, here's Jerome Powell again. We're well aware that if we go too soon talking about rate cuts, that we can undo the good work we've done. Obviously, if they cut rates too soon, people get extremely bullish, start spending their money again, and inflation just rears its ugly head once more. However, if we do it too late, we could unnecessarily undermine the recovery and the expansion. This is true, guys. We've now seen the results of the high interest rates. It is putting a lot of pressure on consumers, and consumer spending, for the most part, even though it is still healthy, consumers have become a lot smarter and more cost conscious for their purchases. They're not not really splurging anymore. So the last thing he wants to do is really keep interest rates too high for too long and just kill people's willingness to spend at all. So far, that's not the case. Consumers have now pivoted from let's say different products at similar prices or whatnot. They are now going for the cheaper quality products, but they're still buying products. So what we have now is a consumer who has substituted its purchases of goods for other goods that are roughly the same quality, but for a lesser price. Now, what we want to avoid is consumers stopping spending at all, either on travel, leisure, and goods as a whole, right? They are still spending on consumer discretionary, but they're being very cost conscious in the way they do it. And we've seen that from different corporate earnings over the course of this cycle, Starbucks, Nike, just to name a few, right? Now, here we go continuing. Earlier this year, markets had expected at least 6 Fed rate cuts of 0.25% each. Market pricing has since adjusted to anticipate 2 reductions, one in September and another one before the year end. A lot of people, the consensus around November. However, as we saw at the last FOMC meeting with the SEP, the Summary of Economic Projections, members of the Rate-Setting Federal Open Market Committee at the June meeting penciled in just 1. Now, Wall Street is calling this bluff, right? So it's either going to be 2 or 1. Analysts still think it's 2, but they're thinking the Federal Reserve is being hawkish on purpose just to not kind of tip their hand away, right? Now, we'll continue monitoring that, of course. Asked if he thought the Fed might cut in September, Powell responded, and this is classic, "I'm not going to be landing on any specific dates here today." Of course he won't. He hasn't so far, and I don't think he will until we get closer to that September meeting. Now, he was also asked about whether he was concerned about the political climate, and specifically, should Donald Trump, a fierce Powell critic, win the November presidential election. And here's what he had to say. "I'm not focused on that at all, and that's just not a talking point. I really think that we just keep doing our jobs." He's been asked about this at last FOMC meeting, and he told the reporter the exact same thing. It is just not on his mind right now. So we'll continue to see how this evolves here, guys, in terms of the Federal Reserve's actions. But so far, nothing new on that article. Really just Powell reiterating the same things he's been saying for the last 6 to 9 months at this point. So that's pretty much everything for the Federal Reserve meeting recap. Now let's get into our technical analysis portion of the video, guys. And you will see that once again, not much has changed. The bulls retain full control of this S&P 500 chart. The 12 EMA, guys, is going to be the line to watch. Daily bullish uptrend is full motion right now. Just a little bit of a tightening range here at the top, but with a close like today and the momentum coming into the close, very possible that tomorrow, keep in mind, it is a half day. The markets close at 1, and then Thursday, the markets are closed for the 4th of July. So not that much trading left in the week, but for the short amount of trading we do have, we would like to see the bulls really crack above, push the new all-time highs, and really get this daily uptrend in motion. To the downside, of course, if ever we lose 542.50, we've been highlighting this level for a few days in a row now. If we were to lose that, then it is simply a daily downtrend. We zoom out to the weekly and we can see that the bulls have so much space here, guys. Anything pretty much above 519, just looking for that weekly higher low for the eventual trend continuation. Great line of support will be your 531. Previous resistance, and also lining up with your 12 EMA. So all in all, guys, no red flags for the bulls whatsoever. And just do a quick recap of all the times we've consolidated so far. This was a period in time where we had interest rate, or rather inflation concerns, right? Resurgence of inflation concerns. They were then appeased and the market just went on an absolute tear. Back in April, once again, after 3 hotter than expected inflation reports in a row, the market had some concerns about the resurgence of inflation. And then after 1 report later, those were also appeased too. And as you can see, the markets are just continuing to rally. So what exactly can potentially derail this bull market? Well, at this point in time, guys, it's probably not going to be inflation concerns. At this point, it's going to be, has the Fed maintained rates too high for too long? And are they going to crush the jobs market and the economy in the process? We know that on our thought process, front and center is consumer discretionary spending. I've made a few videos now talking about the possibility of a consumer spending recession, right? A very soft consumer spending recession, but one nonetheless. So far, that is just a thesis. We don't have any data that is proving that. Yes, we have a number of companies saying discretionary spending is coming down, but it's not yet at recessionary levels, right? Now, the only time that you will see this thesis really start coming front and center is if we start getting back-to-back weaker than expected jobs report, unemployment rate starting to curl up, and economic slowdown as measured by GDP. Those two things are definitely going to be on the watch in the next couple of months, as we are just about to get the Q2 GDP numbers here later on in the month of July. So that is definitely going to be on the watch, guys. It's all going to, in my opinion, it's less going to be about the importance of inflation reports moving forward and more about those jobs report and the economy, because now critics have since pivoted from the inflation narrative being the main concern in the markets, and now the main concern is, have they kept rates too high for too long? And are they going to plunge the economy into a recession because of those things? So that is the thing. Those are the major two things that I will be on the watch very, very much for the next foreseeable future. Moving on to the QQQs now. So QQQs looking very, very solid here today, guys, right? We even had some participation from semiconductors, AMD participating. NVIDIA, really the only one that's getting left behind here. Usually was the opposite. Whenever this industry would pull back, NVIDIA would be the only green. Well, now NVIDIA taking a well-deserved breather, letting the rest of the index make up for it, right? The rest of the index is not even the same weight as NVIDIA as a whole. Just keep that in mind, right? So they kind of offset one another. In terms of the Qs, though, very, very healthy performance by your big tech names and even some of your sub-tech names, right? Think Oracle, Adobe, Palo Alto Networks, a few of these cybersecurity plays really holding their own or coming back. So looking very, very good on the Qs right now. The Qs, same analysis, guys. Gorgeous daily uptrend in motion right now. Your daily higher low was pretty much set with the low of yesterday, 476, and now we are pretty much at the double top or even triple top, if you want to say, the location for the market. So if we do push up tomorrow, then daily uptrend is continuously underway. We will keep an eye on this 12 EMA as a first line of defense for support. If for whatever reason, though, we completely turn around tomorrow and into the Friday session and crack 476 to the downside, daily downtrend is underway. Loss of the 12 EMA will be notable, and then we're just in for a bit of weekly consolidation here. So much space for the bulls. Anything above 444, just looking for that weekly higher low for the further trend continuation. So no red flags on the Qs as of yet. Rotation, very, very solid. Moving on to XLF financials. Finally, financials with a roaring day to the upside here, guys. And that was due to a number of different participants in the market. Number one, look at all of your banks. All of the major banks having a very good day of trading today. Number two, we also had the credit card issuers, which have been pretty much down in the mud for the past couple of weeks of trading, finally having a very nice day. Visa pushing up almost 2%, MasterCard 1.6%. They are looking very, very good for a little bit of a rebound. So happy if anybody was able to take those swing trades that I was recommending on both Visa and MasterCard as they approached a very, very large area of support and now are looking for that initial bounce, trying to get back their daily uptrends as well. But very, very healthy day of performance, which did contribute to really pushing this index higher. And that's exactly what we were saying in yesterday's video, guys. Financials, they need Visa and MasterCard to really get this big leg in motion. And so far, so good. Trying to attack the previous highs right here, 41.85. If we do break that, guys, daily uptrend is back in motion by the bulls. Nice to see that we are now healthily above our moving averages. Very strong close and looking for that potential weekly trend expansion, right? I'll remind you, this was a weekly downtrend. Now what have the bulls done? They have 100% completely engulfed this most recent leg of selling. If we were to get the break above, well, it should just be a case in point for the bulls able to look for the all-time highs. And if we do get rejected at these all-time highs, maybe a little bit of a pullback back into our area of support before another leg higher. So financials looking very, very strong after today's rally. Looking forward to see if they can continue this momentum to the upside. But obviously, the banks are already running a lot, guys. So it's going to be predicated on Visa and MasterCard once again. JP Morgan, you can see they've done their fair share. They're at all-time highs. Wells Fargo, they have done their fair share almost at all-time highs as well. Taking a few more. Bank of America. Bank of America also has done a great job most recently. Not all-time highs, but 52-week highs. They keep pushing. So those are your three major banks, right? In terms of what has to come next, guys, we need to see continued recovery by Visa and MasterCard. If ever the banks take a little bit of a breather, I'd like to see Visa and MasterCard take over and continue that rotation within the financial sector to the upside. Now, moving on to XLV. XLV also with, a little bit of a pullback day here today, but that's okay, guys. Now, number one, what what happened is we unfortunately lost the daily uptrend. Daily downtrend is now in motion for the bears, but we are coming in, guys, to some short-term levels of oversold conditions. The 4-hour just tapped oversold this morning, and we were coming out of 1-hour oversold conditions as well. So if you want this move down to stop, you need to see, as I always say, guys, need to see a recapture of the hourly trend. So far, looking like they want to do that. If we can continue into tomorrow, your daily bounce will be underway at that point, and then we'll be looking to recapture as much of this downswing as possible to give ourselves the best odds of resetting this into a daily uptrend. I really would like to see us get back above this yellow line, 144.78. Big previous support, guys, now acting as resistance. All the moving averages are there too. So it would be nice to see one day, guys, of really move higher into maybe the 146 and reset this into a daily uptrend. If for whatever its reason we set the lower high into lower low and continue a daily downtrend on healthcare, well, guys, on the weekly, a decent amount of space still, anything above 140.67, just looking for that weekly higher low for continued trend expansion. So far, no major red flags, even though we have had pretty much 5-6 days of sell down in a row, just some healthy rotation, right? Financials now getting a turn, QQQ continuing to get a turn. If ever for which reason they turn around, I do need to see healthcare with a little bit of a recovery cycle in there. So far, even though we did break down below, guys, I don't see any immediate red flags just because the bulls are still well in control of our longer term timeframes on the monthly and also the weekly timeframes too. Moving on to semiconductors right now. Semiconductors showing a little bit of life today. This ETF right here up about 1% on SMH, looking very good, but still trapped in a tightening range, right? So one of two things is going to happen. If we get a break of 266 to the upside, daily uptrend is started anew, and then we pretty much have our weekly higher lows, which are being set onto the furtherance of the weekly uptrend. However, if we break them to the downside here, guys, at 256.05, just understand that we may just be due for furtherance of the daily downtrend and further weekly consolidation. Further weekly consolidation, guys, is not a bad thing at all. They can definitely afford it here, right? Anything pretty much above 198, just looking for that weekly higher low for the furtherance of the trend continuation. I would love to see SMH, if we can pull down a little bit more. I'm not asking for too much, a little bit more here, down maybe 247, 245, just come down, tap the 12 EMA, and then be due for another leg higher. That would not be the worst case scenario, but if for whatever it's reason the bulls are just too impatient with it and want to launch from here, well then so be it. That, I guess, was pretty much the dip. I was looking for a little bit more dip. So far, doesn't look like the bulls want to give up too much, but the week is not done yet. Still a decent amount of trading left to be had, but looking very, very healthy, guys. Now moving on to IWM. So IWM looking decent today, right? 0.34%, but still kind of trapped within the last 2 days of trading. Now, in terms of IWM, we are in a nice daily uptrend right now, trying to set the daily higher low and go for the daily trend continuation higher. Looking not too bad, if I do say so myself. In terms of the weekly as well, what are the bulls trying to do? They've been trying to set the weekly higher low and go for this weekly trend expansion. But as I've said many, many times on the channel, guys, I don't think that the move everybody is looking for, right, is for them to catch pretty much the S&P and the QQQs. In my opinion, it's going to be very tough for them to do that while yields are still relatively close, especially longer term yields are relatively close to their pretty much 52-week highs, right? We really need to see yields start coming down. We need to see Jerome Powell really start to talk about that date whereby he's going to cut interest rates, and only then will the Russell be able to really start managing some momentum to the upside and continuing this breakout of this 212 location. So far, still, the risk on trade is not very popular amongst Wall Street. I know, it does seem as though it is popular, but for all intents and purposes, guys, stocks that are not yet profitable yet just haven't been getting that much love in the markets. We've seen everything else rally. We've seen profitable tech. We've seen value stocks run, but we have not seen unprofitable small caps run just yet. And that is the only thing holding it back, in my opinion. So as of now, guys, I still do believe if for whatever its reason, the Russell continues to consolidate, guys, I really love this lower 190 level, 194 down to about 190. That is the location that I am personally looking to build a little bit of a swing trade position. I'm just being a little bit greedy, guys, just because it is an interest rate sensitive sector, right? Now, lastly, moving on to the Dow Jones. Dow Jones not looking too bad at all, right? Dow Jones really trying to get a push here together underway, 0.41% to the upside, and it's really reliant on breaking 39,544. If we can do that, guys, daily uptrend is set back in motion to the bulls. I mean, it currently is still a nice daily uptrend that would just continue it to the upside. We are nicely above all the moving averages, and most importantly, this yellow line, previous resistance, current level of support. You can see how well the bulls have defended this in the most recent week of trading. Now just looking for that continued trend expansion. option. On the weekly is looking very decent as well, right? Just trying to continue push this weekly uptrend higher. Very, very weak movement by the Dow Jones bulls in the last 6-7 weeks of trading, but that's not a bad thing, right? Nothing is overbought. The weekly is not overbought. The daily is very far from being overbought, so the Dow Jones can put together a few very green candle days, and nobody would even see the difference in terms of momentum, right? Just still trying to attack our previous all-time highs, but I really see no red flags. Even if this were to tighten up a little bit, guys, we have so much support down here, especially in the 38,500 level. That's pretty much everything for your indexes. Now let's jump into a little bit of crypto because we did crypto yesterday, right? So in terms of Bitcoin, guys, Bitcoin's still just sliding lower, right? Daily downtrend was there, and now the bulls trying for the daily uptrend reversal. So looking very good, pretty much anything above 60,000, looking for a higher low to push into a new daily uptrend. This little recapture of the daily uptrend, guys, is synonymous with your weekly lows being set. So it remains to be seen, can the bulls put together a little bit of a rally, get some legs, and start attacking this 67,000 level, which proves to be very, very resilient for the bears, right? So all in all, Bitcoin still also part of the risk on trade. Still not the most favorable trade in the market right now, which is probably why Bitcoin's been doing absolutely nothing for virtually the past 4 months of trading at this point. As we get closer to that first interest rate cut, I really do think that this one should start trending again. In my opinion, though, no reason to not be building positions, guys. If you see 58 all the way down to 50, that is going to be a buying opportunity for me every single time. I did pick up some Bitcoin just last week when we did come down into the 59s. And if we continue pulling down, guys, not a bad thing. The bulls are still largely in control of this market. Beautiful monthly consolidation at the top here. Just going to be looking to add to the position over time. Moving on to Ethereum. Ethereum also not looking too bad. There's a lot of ETF approval news that are supposed to happen either this week or next week. So the SEC is currently looking at the filing, but they have not given their firm decision on the matter just yet. A lot of analysts are expecting that decision for the Ethereum ETF to come in pretty much over the course of next week. So Ethereum, guys, still pretty much in the context of this daily downtrend, right? And now finally the bulls trying to set up for a trend change. So looking good. They got to protect 3361. However, lose that, you lose the new daily uptrend, guys. And unfortunately, your weekly consolidation will just continue. This entire weekly move down, guys, after the ETF filing news, right? Entire move down, just looking for a weekly higher low for the continuation of the weekly uptrend. Tons of space still, anything above 2856, just looking for that weekly higher low for the trend expansion. The largest area of support, guys, in my opinion, is pretty much 3300 all the way down to about 3100. This is the area that I'm going to be looking to add a little bit of Ethereum if we do continue our little bit of market weakness here and pull back into this area in the next coming weeks. So that's pretty much everything for crypto. Now let's move into big tech, and big tech was flying today for the most part, especially Tesla. So moving on to Apple looking very, very decent here today, right? Gorgeous, gorgeous, gorgeous extension of the uptrend, looking very, very good. Daily uptrend is beautifully underway by the bulls right now. As soon as this move is topped out, just looking for a higher low, anything pretty much above 210.36, looking for that higher low for the continuation of the daily uptrend. No red flags in sight here, guys. Little bit overbought on the hourly time frame, and even the 4-hour, guys, not yet overbought just yet. So Apple can continue after consolidation. It really did a great job cool down the daily as well. So Apple does have some room to move here, guys. Obviously, your next target is going to be pretty much 230 psychological. So looking very, very strong is Apple right now. Even on the weekly here, guys, right? Beautiful weekly move up. Only some very, very short and shallow consolidation before pushing a new high at the current time. So the weekly higher low is set right now. 207.16 is going to be the mark. Apple looking extremely strong here, guys. I was waiting for a little bit more of a pullback, 205 down to about 200. Just did not give it to us. That's just the name of the game sometimes, guys. Sometimes it just doesn't happen, right? But don't be worried for me. I have tons of shares in my Apple long-term portfolio. I was just looking to add a little bit more in the swing trading portfolio that I showcase on the channel. So congratulations to all Apple bulls out there. Continues to look extremely strong. Moving on to AMD right now. AMD finally with a big green day, guys. We haven't closed a big green day on AMD, especially a 4% day, for this pretty much the early part of June, right? So it has been roughly a month at this point that AMD's been looking for a move like this and just hasn't got it. Today, finally, they are underway. So they are trying for the daily trend change. We would need a break of 166.57. Get me that break. We have a new daily uptrend. We are finally above all of our moving averages too. And that's not a small thing here, guys. We've been under them since the 10th of June. So it's been a while that we haven't been able to close above those. Looking very, very good now for that potential breakout on AMD. And even on the weekly, guys, the weekly is looking really good right now, right? Weekly uptrend, trying to set the weekly higher lows, go for that trend expansion. That trend expansion needs to take us into 175, 180 is going to be the next target for AMD. And I really think that it does have some legs and could possibly be moving there over the next coming weeks. AMD not with earnings much before the 30th of July. So I really don't think that the stock is going to absolutely skyrocket before earnings. But can we move up and challenge the 175, 180 level in the next couple of weeks before earnings? And then the earnings catalyst can either send us way higher or way lower. Absolutely, guys. And that's going to be the type of setup that I'm going to be looking for the entire time that we continue around to maintain these levels, guys. I'll continue to write short puts here, guys, 160 all the way down to pretty much 140, depending on the price action. I really love this level, and it's paid us very handsomely in the past month, the whole time we've been playing it. So AMD looking very, very good here, guys. Nothing bad to say. We'll just continue having a look at the price action tomorrow and Friday. Moving on to Amazon right now. Amazon looking extremely strong once again here, guys. 1.42% to the upside and just blasting off to a new all-time high pretty much, right? Didn't even give us the breakout retest trade of our previous all-time highs that we were looking for, but that's okay. It doesn't need to. It's just a classic trade that I like to look out for in the event that it does present itself. Unfortunately, Amazon just didn't give us the opportunity, right? Still, daily uptrend healthily under motion, looking for higher at this point. Daily, not yet oversold too much. Overbought. The 4-hour, definitely not overbought at all. And even the 1-hour too. So Amazon definitely can continue this little upswing here, higher and higher and higher, finally breaking above the 200, closing at 200. This is the first time in the stock's history at this $200 range. Well, obviously they've split the stock, in the past, right? But as of this most recent move, right? Take a look at your previous all-time high. It was pretty much 187, finally hitting the 200. We've been calling for the 200 on the channel, guys, for pretty much since the lower 180s, right? So hopefully you guys are able to get a nice piece of this trade as well. At this point in time, guys, no red flags for Amazon whatsoever. And even if we were to lose the daily uptrend and go into a bit of weekly consolidation, look at the amount of space by the bulls, guys. Anything above 174, just going to be for a healthy weekly consolidation into the continuation of the weekly uptrend. No red flags for Amazon and their business. As I say each and every video, guys, this is the big tech stock to watch for the remainder of the year. Why? Because they're doing something they've never done before. They're focusing on free cash flow and they're focusing on net margins. Usually Amazon does not do that, but now that they're operating at scale, both in their AWS business and their retail business, which they spent a ton of money scaling up those two things in 2020, 2021, and 2022, now it's time to reap those juicy profits and give back to the shareholders. So hope to see some juicy buybacks from Amazon maybe in 2025. So moving on to Google. Google also looking extremely strong today. No red flags whatsoever. 1.15% to the upside, looking very good. Daily uptrend just simply continues at this point. Looking for a break of the all-time highs, 187.24. If for whatever reason we don't get it and roll over similar to Amazon, guys, so much space on the weekly, anything above 171.36. Looking for that weekly higher low for the eventual trend continuation, guys. Keep an eye on this yellow line right here, 179.61. If we do pull back into it, I think it could be a nice little cheeky swing trade opportunity, right? A little bit of a pullback into this level. You have your larger term weekly bulls that are probably going to be sitting there after struggling with it for 3-4 weeks in a row and may just be able to kick this one a little bit higher. All in all, Google bull control on every single time frame. Monthly control, weekly control, a little bit overbought on the weekly, but not too much, not anything to cry home about. And the daily full trend control as well. Very beautiful chart. Now moving on to Meta. Meta also looking decent, guys. 0.96% to the upside, looking very, very strong after yesterday's momentary lapse of weakness right there. So double bottom is still in motion. Did not lose that 493, so they do maintain the daily uptrend possibility, right? Now what the bulls need to do is clear 522.21 to the upside, and it's going to be a little bit of a challenge here, guys, because we have big overhead resistance, all-time high resistance, but the bulls can clear that, guys. no doubt in my mind that we can't hit pretty much 550 in the next forthcoming weeks of trading. So looking very, very strong on Meta. Daily uptrend is very beautiful. However, if we were to break yesterday's low at around 493, right, that would be a daily downtrend opportunity for the bears and would just send us into a little bit of weekly consolidation. Anything above 454, just going to be looking for a weekly higher low for the eventual trend continuation as well. And that's a trade I'm looking out for, guys. If Meta shows a little bit of weakness and gives us 482 down to about 465 again, I will be aggressively bidding this area, guys, because Meta's fundamentals this year are absolutely tremendous. I showed this on the channel yesterday, guys, but Meta is ramping up solid. Look at their EPS expansion in the next 3 years. Look at their revenue expansion in the next 3 years. And the kicker, right, the icing on the cake is look at this free cash flow that they're generating. And this year should be relatively similar. Huge buybacks from the stock as well. PEG ratio at pretty much 500 is only a 1.23 for a company like Meta. That is absolutely crazy. So I would love to bid this area if ever we revisit it. Now moving on to Microsoft. Microsoft continue pushing a new all-time high today. So very nice trading by them. Daily uptrend is healthily in motion too. As soon as this move tops out, going to be looking for a higher low. Anything above 446.20, just looking for that higher low for the continued trend expansion. 12 EMA should be the guide. If ever Microsoft loses the 12 EMA in a significant fashion, that's usually when you get your larger form daily consolidation, right? But as of now, no signs of that yet. How do you know that we're topping out? Just look at the smaller time frames, right? You're going to need that hourly trend rollover. So far, not the case. Not even overbought on the hourly whatsoever. Not even overbought on the 4 hour either. Just not overbought anywhere. Microsoft's looking very, very strong right now. And if for ever it's reason this does happen in the next few weeks of trading, just to prepare yourselves, guys, any pullback on the weekly, going to be looking for a weekly higher low, anything above 405.69, higher low for further trend continuation. If we get another retest here of this area right here, guys, let's call it 430, 433-ish. Definitely a nice opportunity to bid the stock. This is a breakout of the all-time highs, retest, and maybe run. Looking very, very strong. Moving on to Netflix right now. Netflix, another name which is looking strong, however, not breaking out of the most recent price action, right? So Netflix, I see nothing wrong with this chart. If anything, guys, this is a heck of a bull flag. Just a very solid tightening range above the previous highs, respecting the 12 EMA. Look how well Netflix has respected this 12 EMA pretty much since the breakout started occurring from the after earnings from the month of May, right? Well, even before then, it just really respects this 12 EMA beautifully most of the time. So that is still going to be my guide. Still looking for a break of 689.66. Give me that break. Daily uptrend is obviously continuously underway, and then we will look to attack our all-time highs of 700, guys. We are almost there. If for ever which reason, though, this range breaks bearish, because that's always a possibility, daily downtrend will be started, and weekly consolidation will just continuously be underway. So far, just sideways consolidation, but even a little bit more consolidation of the downside, guys, would not be opposed. Anything above 628, going to be looking for that weekly higher low for the eventual trend continuation, guys. Keep an eye on 655, very, very strong level of support. That's pretty much this yellow line right here that we just broke out of, right? So Netflix looking absolutely fine. No red flags in my opinion, and also no real buying. I really haven't touched Netflix stock since the after earnings sell-off where I made a couple plays on it and added some shares to the long-term portfolio. But other than that, guys, right now for me, this one is literally just a hold. Now moving on to NVIDIA. So NVIDIA also down about 1.31%. NVIDIA, green candle, but unfortunately a red day, right? So NVIDIA not looking too bad in the grand scheme of things. Yes, we are potentially setting up for the daily downtrend. That would be a break of maybe 117.82. Break that to the downside, guys. And yes, daily downtrend is in motion. And yes, weekly consolidation continues. Potentially at that point, bringing us maybe into the 110, a little bit of a touch of the 12 EMA, maybe a little bit of a scenario where we can see a touch and just continue to mount a rally for NVIDIA. No red flags whatsoever on the company right now. One thing's for sure, if we continue getting weakness on NVIDIA down here, I will continuously write short puts 110 down to 105. I think that would be a tremendous opportunity to pick up NVIDIA. That would literally be from the top, a sell-off of 20 to 25%. And with NVIDIA being so bullish right now, their growth is slated to continue past 2025. So I don't believe there's going to be any growth concerns or valuation concerns on NVIDIA, at least for the next 2 quarters while they continue to ramp up. So that being said, guys, any 20-25% dip on NVIDIA is a great opportunity to bid such a solid company. That being said, however, no guarantee that the bears can actually follow through because this one is so strong. If they don't follow through and instead break 127.79, daily uptrend started anew for NVIDIA. Weekly higher lows are set using this pretty much box. This box has been, doesn't look like the most solid one, but it's been very accurate in holding up NVIDIA stock for the last 2 weeks, right? And that point would just be looking for the higher low and continuation. That's if they get this daily uptrend shift. So looking fairly decent on NVIDIA in either case scenario. Moving on to Tesla right now. So Tesla, 10% day. Finally, Tesla breaking out of this range of accumulation that it was in for about a month of trading, right? But it's normal. There was just so much uncertainty around the stock, uncertainty around deliveries. Will they be able to, with their price incentives, with their price cut incentives, and with their financing incentives, 0.99% and 1.99% versus the market rate of 5 and 6%, with those two incentives, was it going to be enough to get Tesla's deliveries to where they should be, beating expectations once again after failing last quarter? And number two, Elon Musk's compensation package. Well, thankfully for us, in the last 2 weeks, all those issues have been cleared up. Those two issues, guys, have been keeping the stock pretty much flat for almost the entire rally, right? We had the initial rally after earnings, yes, but thereafter a month and a half, even more, of uncertainty. And now you see when you lift uncertainty out of a market or out of a stock, finally, it can choose a direction and run pretty hard. So what happened for Tesla's deliveries? Well, Tesla quarterly deliveries fall less than expected, right? They could have been a little bit more bullish on this article right here. Maybe they just don't like Tesla, but still decent here, guys. So let's go into the meat of the article right now. So the higher than expected deliveries data from Tesla, as a matter of fact, let's go through the numbers right now. Supposed to deliver 438,000 was the street consensus, and they came in with 444,000. So they did have a nice little beat, but obviously it was under what they delivered in the same time last year. And we'll take a look at that below. So the higher than expected deliveries data greatly assuages concerns regarding softening EV demand, something we've talked about for Tesla for months now at this point. The stock continues to ride a wave of positive momentum following its annual meeting in mid-June, in which shareholders reapproved Musk's 2018 compensation plan. Uncertainty factor number one lifted off the table, right? Now, while the stock rebound and delivery figures were viewed by some analysts and investors as a sign of possible improvement for Tesla ahead of its robo-taxi reveal on August the 8th, huge date for them, others worried that the EV maker is exhausting its bag of tricks, according to a research firm Edmunds, with its price cuts and higher financing incentives, right? Now, Tesla handed over, well, we already went through that, my bad. So Tesla delivered 422,000 Model 3s and Model Ys and only 21,500-ish units of other models, Model S, Cybertruck, and the Model S. So obviously their core business is still the Model 3 and Model Y. They're more affordable packages, right? So let's take a look, guys. Tesla records second consecutive drop in quarterly deliveries. Now, obviously, guys, we're measuring on a year-over-year basis, right? Usually you guys have always known Tesla to be growing every single year, but still now 2 negative quarters in a year. It's been a tough year for them, guys. Everybody can admit to that, right? But at least they're coming in under the expectation. It was expected to be a lot lower than this. We actually beat the expectation for today. So any positive news for Tesla at this point is very well received. It should not derail their plans for further 2025 expansion. And the EV market, as per a lot of analysts, should also be coming back in 2025 just because interest rates will be coming down, which should have an indirect stimulant on demand, right? But all in all, guys, really not used to seeing red for Tesla, especially multiple quarters in a row in terms of their delivery growth. Now, moving into China, which is one of their largest markets, right? So Tesla offered loans with interest rates of 0 or near 0% on car purchases in China and the United States. In the US, it heavily promoted its leasing plans, which make its vehicles eligible for 7,500 federal credits. Now, this is very good, guys. So, I mean, Tesla has been trying to simulate demand all ways possible. We've talked about it on the channel for the past 2 months now. Number one was obviously the price cuts on the Model 3s and Ys, not only in China, but in Europe, but in North America too. Then obviously their financing that they were providing 0.99% and 1.99% on the Model 3 and Y respectively. That obviously stimulates demand because now no longer do people have to pay the market interest rate, which is around 6-7%. So Tesla has to take that hit in the margins, but at least it's getting vehicles out of the door, right? Which is what Elon Musk wants to do. Clear out old inventory and really get to the new refreshed Model 3s, right? So let's move on. Tesla's electric vehicles deliveries outpace BYD. This is very, very good, guys. Tesla in red, BYD in blue. As you can see, there was some concerns towards the end of last year that BYD was selling more cars than Tesla, which was true for a short amount of time. And now in the last 2 quarters, though, even despite the entire EV industry slowing down, everybody slowed down, right? But now still, Tesla remains the leader here in its largest, well, not its largest market, but a very large market for Tesla, representing about 22-23% of overall revenues for Tesla is China, right? So nice to see them still perform in the Chinese market, despite a lot of criticism that they've gotten in the last 2 months. So Tesla's China sales, which include domestic sales and exports to Europe and other countries, fell 17% in the second quarter from a year earlier. Obviously, right? A little bit slower than our Q2 of last year, which is a little bit higher, but at least they're still delivering more than BYD. BYD, however, they did deliver more cars in this Q2 than the Q2 over here. So that's the one little contrast that the article doesn't mention. Tesla sales were weak in Europe, with sales down 36% in May alone due to waning EV subsidies and poor demand from fleet operators, who accounted for nearly half of its sales in the region last year. So obviously, guys, EV demand is still a problem, and I've said this time and time again. I don't expect Tesla's deliveries to just skyrocket through the end of this year. We're going to need interest rate cuts to turn around this cyclical nature of the business, guys. And once again, you can't snap your fingers and convince consumers they're rich enough to go out and buy a new car. It's going to take a lot of time, which is why even Elon Musk has said mid-2025 onwards to be the actual recovery story for Tesla demand and EV demand as a whole. Now, lastly, headwinds. Musk said he expects the company to increase deliveries in 2024 from a year earlier. However, Wall Street largely expects a drop due to poor sentiment around EVs. So now, Elon Musk versus Wall Street, which one is right? Well, at least Musk has some insider knowledge of the industry, but then again, he is speaking from a position of power, being the CEO of Tesla, right? He's obviously not going to he's just not going to sandbag it, right? He wants to stay as bullish as possible. So that is still something we're going to keep ongoing monitoring around. Now, Musk has responded to the headwinds with rounds of aggressive cost cutting, including mass layoffs. This is true. They literally sent their entire charging network team home pretty much, and a retreat from a major strategic plans, including those for a long-awaited affordable model that has been expected to cost $25,000 and take on Chinese rival. Yes, this is true, guys. We still don't have that $25,000 car. There's a lot of speculation over whether or not that car is actually going to be for personal individuals, or rather, is it going to be for Tesla's own in-house robo-taxi network? That we need to see upcoming on August the 8th, Tesla's Robo-Taxi Day. So that's pretty much everything for deliveries here, guys. Looking very, very strong for the company, right? A little bit of a beat, nothing stellar, but as I've said, any good news will send Tesla skyrocketing. A lot of pent-up demand for this stock. A lot of people waiting to see it round the corner. And now just may be the time. The technicals are looking very, very strong. Gorgeous daily uptrend in motion by Tesla right now. As soon as this move tops out, daily, a little bit overbought. I can't lie, right? A 4-hour 85 RSI, very, very overbought. And even the 1-hour too. Can this one continue? Most likely, yes, guys. It's Tesla. It can remain overbought for some time. The next area of resistance, guys, quickly approaching, right? 250, 255, going to be a very big level for the stock. The stock is really struggled a bit at that level prior, but looking very good now. Above all of your major moving averages, guys, we have not been above this 200 MA since pretty much the month of January. So clearing a lot of space, breaking through a lot of resistance levels as well. Clearly out in the open right now, looking very good. So going to be looking for that pullback and the eventual daily trend continuation as soon as this move tops out, right? So how do you know the move's topped out? Just look for the change in the hourly trend. That being said, look at the weekly, guys. If Tesla can close the weekly like this too, it's going to be looking very bullish. Weekly uptrend, healthily in motion, and above all of our weekly moving averages. That too has not happened since the early parts of July. So looking very good. Momentum is clearly shifting for Tesla. MACD now wants to run. The weekly not yet overbought just yet. So weekly looking extremely strong. As I've said, next target is going to be that 255. Very juicy breakout from Tesla. Congratulations to all the bulls who held strong and maintained their shares in this level despite all the negativity. Now you finally reap the rewards. I do have some long-term shares in my long-term portfolio, but unfortunately, guys, I had some swing calls that I sold yesterday. We could have made a lot of money today, but I just didn't want to take the risk because obviously it was anybody's guess, right? So in that case in point, unfortunately, no swing trade position for me since around the 205 area, so I missed a lot of this move, but that is perfectly fine, guys, right? Tons of other opportunities on the table, and we may just be looking for Tesla on a little bit of pullback to make an opportunity there too. So moving on to Palantir now. Lastly, Palantir pulling back a little bit on the day, 0.92%. They were actually green for a very nice start to the morning, and then just kind of tapered off towards the tail end of the afternoon. They were doing a great job maintaining the gains up until about 2 o'clock before they really started rolling over. So in the event Palantir just starts rolling over a bit further here, guys, and starts getting some consolidation. You guys know, healthy daily uptrend, any move lower looking for a higher low, anything above 24 looking for that daily higher low for further trend continuation. I would probably target right here, 24.63, right in line with the 12 EMA as well. So 24.63 all the way to about 75-ish could be a decent little pullback zone for Palantir. No red flags at all. The bulls are in full control of this chart right now. Gorgeous weekly breakout underway, and the next resistance target, well, I mean, we're right here, guys, right? 26.50. That's what we're kind of running into right now. And the next big one is obviously this $28 mark. We're just not there yet. So if ever Palantir does take a little bit of a breather, nothing wrong there. And even if we take more than a breather, an extended breather, daily downtrend, you guys know the drill. Anything above 20.7, just looking for a weekly higher low for further trend continuation. If we get some extended consolidation on Palantir, guys, I would love to play this 23 location again. Such a juicy area of support. And that is pretty much everything we had for you guys today. Hopefully you guys enjoyed today's video. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Second, if you aren't subscribed, guys, consider subscribing to the channel. We do these videos every single Monday through Friday after the close. So I would definitely love to see you back here with us. And lastly, if you ever have any questions whatsoever, guys, a stock you want me to take a look at, technical analysis, an options play you want a second opinion on, not financial advice, of course, or macro discussion, anything you guys want, leave it down below in the comments and I'll get back to you within the first 24 hours. Take care, guys. I'll see you tomorrow after the close for a little shortened half day of trading, and I'll give you guys more of a portfolio update. So take care. See you tomorrow, and peace.